Good day. Welcome to the screencast of FAC 3704. I am Jacques van Staden, one of the lecturers of FAC 3704, Group Financial Reporting. My fellow lecturers on the module are displayed on this slide. Please contact us if you experience any difficulties on the module. You are welcome to contact any one of us telephonically, per email, or you can make an appointment to see us in person. The purpose of this presentation is to discuss question 1 of the May-June 2019 exam paper. Please download this exam paper from MyUnisa and if you can, print it out. I would also advise you to do this exam paper under exam conditions. Treat this as a mock exam. After you have completed the mock exam, continue with this presentation. One of the major problems students experience in the exam is that they are overwhelmed with all of the information presented in an exam case study. Another problem is that students do not finish the paper in the allocated time. The question is, how can an exam question be answered effectively but also efficiently? Let's begin at the beginning. Where do you start when attempting a question in the exam? First, read required. This will help you that when you read through the question that you are focused on identifying relevant information. Then read through the question, identify the group structure, draw yourself a picture, indicate on this picture the amount of shares one company holds in another company, write whether a company is a subsidiary, joint venture, associate or a simple investment. Is there intra-group transactions? What works is to use color pens. Make each entity a different color. Thirdly, draw up the framework of what is required. We refer to this framework as the skeleton. And lastly, fill the skeleton with its meat. In other words, answer the required. Let's apply this question 1 of the May-June 2019 exam. Now that the planning is done, I hope you have a clear picture of what this question is about. The next step is to tackle part A of the required. In summary, part A is to provide a pro forma journal entry for additional information, point number 5. Note that the required is silent or if journal narrations are required. In this case, you need to provide the journal narrations. On 1 December 2018, Warner Limited granted a loan of $95,500 to Bancroft. The loan is repayable on demand and bears interest as 9% per year. The interest for December 2018 is still outstanding at year end. Warner has correctly accounted for this interest receivable in other income and trade receivables, respectively. Bancroft has correctly accounted for the loan from Warner as follows in its separate accounting records. Debit bank, credit loan from Warner Limited by $95,500. Debit finance charges, credit trade and other payables by $716. Therefore, the first entry is for the intercompany loan received and the second portion for the 1 month interest outstanding at year end. We can see that all the calculations have been done for us. Our job is to identify the correct accounts to be eliminated. The accounting entries in Bancroft separate accounting records have been given. Therefore, the effect of this entry in Bancroft's financial statements will be: in the statement of profit and loss and other comprehensive income, finance costs will increase of 716. In the statement of financial position, the asset section, bank will increase of $95,500 received from Warner Limited. In the liability section, there will be a loan from Warner of $95,500 and trade and other payables will increase of 716 due to 1 month's interest outstanding. My question to you is, what were the accounting entries in the separate accounting records of Warner Limited? Write it down. Loan to Bancroft, an asset, was debited and bank credited with $95,500. Trade and other receivables was debited and other income was credited with 716. Remember that it is the 1 month's interest outstanding to Warner. The effect of this entry in Warner's financial statements will be: in the statement of profit and loss and other comprehensive income, other income will increase with 716. In the statement of financial position, in the asset sections, bank will decrease of 95,500 that was paid to Bancroft. There will also be a loan to Bancroft of 95,500 as Bancroft owes Warner 95,500, and trade and other receivables will increase of 716 due to the 1 month's interest outstanding. Remember, when we consolidate, we add everything together. Therefore, the effect of adding Warner and Bancroft to a specific transaction will be the following. I have made Bancroft's accounts red and Warner's orange. We can see that the bank account's net effect is 0, as in a group perspective there was an in and an outflow of 95,500. The accounts that is left need to be eliminated. Remember, the group cannot grant loans or charge interest to itself. Let's firstly look on what a pro forma journal entry is to eliminate the loan accounts. Loan from Warner is currently a debit and loan to Bancroft is currently a credit in the consolidated financial records of the Warner Limited Group. Therefore, in order to eliminate the loans in the group entities, we need to debit loan to Bancroft and credit loan to Warner with 95,500. The loan accounts have now a 0 account balance and are therefore eliminated. Next, we need to eliminate the finance income and finance costs which was caused by the intercompany loan. Remember, the group cannot charge or pay interest to itself. Finance cost is currently a debit and other income a credit in the consolidated financial records of the Warner Limited Group. Therefore, in order to eliminate it, we need to debit other income and credit finance cost of 716. These accounts have now a 0 account balance and are therefore eliminated. Lastly, we need to eliminate the interest receivable and interest payable, which was also caused by the intercompany loan. Remember, the group cannot owe or receive interest to itself. Trade and other receivables is currently a debit and trade and other payables a credit in the consolidated financial records of the Warner Limited Group. Therefore, in order to eliminate it, we need to debit trade and other payables and credit trade and other receivables of 716. These accounts have now 0 balances and are therefore eliminated. Your pro forma journal entry should look like this in your solution. Please remember your journal narrations. This is the end of the first part of the screencast. Part B will be discussed in the next screencast.